Good afternoon, guys. Hope everybody is doing well. I'm hoping the Wi-Fi stays okay. I'm having a little bit of internet issues this afternoon. So I'm hoping it will be okay. If we do have any issues, then I might have to end the stream a little bit earlier, but we'll try and make it through. If you are watching, let me know where you're watching from. Just want to make sure my audio is on the correct settings. Yeah, we should be good. Right, so welcome to the Gold Market Mastery webinar 12 p.m. session. We're going to go over some charts of interest. I'm actually on Euro US dollar at the moment. We did talk about Euro dollar in a video yesterday, and we were talking about potential short opportunities, and we've started to see that potential breakdown. So I want to focus on gold, though, because we're talking about gold today. We're talking about where the price of gold could go. We're talking about the situation in the US. I'm actually just going to bring up the table of news for today. We've got a bit of news coming out, or we've had some news coming out this morning. We've had Bank of England data, got some unemployment claims coming up tomorrow, which we're going to be doing a webinar on. So if you can join me for that, that would be great as well. Yeah, so got to run through a few things, a few opportunities potentially on gold. If you did join me this morning, it's going to be pretty much the same thing again. So I don't want you to get too sort of bogged down in going over the same things. So we're going to go over, I'm going to try to see if I can bring up some COT reports, because the last time we talked about the COT reports on gold, it wasn't quite in an area where we wanted to be a buyer of gold, or a seller even, sorry. So we wanted to see if the price of gold could continue to the upside in the short term. Just going to see if I can bring up the COT data here, see if it's changed too much. See if I can go to the COT chart on gold. What we're going to do here. I think what we want to do is highlight the commercials if I can. Study sends. Okay, I don't think I can. But this is the chart that we looked at last time regarding commitment of traders. This is barchart.com. So if you do want to look at any kind of free commitment of traders stuff, I'll post that into our chat box. So if you're on YouTube and on Facebook, you'll be able to see this. And it's free. You don't have to sign up for anything like that. So if you do want to have take a look at this in a little bit more detail, then you are more than happy to follow that link there, and you can jump in on that. So commitment of traders, the last time we were looking at this, we were looking at the commercials, which is this red line in here, and we were trying to identify if they were at a strong enough level to be aggressively selling the price of gold, and we're not quite there just yet. Hi Calvin, hope you're well. In fact, when we looked at this study last time, we were looking at this area through here. Let me just see if I can grab horizontal line or something. So yeah, you've got that 2075 level is where we're looking at the moment, just through there. And the last time we got to this area, contracts on the short side were minus 302,000 for the commercials. So I'm looking to see if price will potentially get there again, or the commitment of traders will get to those levels again. Again, you can see like when we peaked at these highs here in the past, we're at the minus 308,000. When we peaked again here back in November of 2021, we're at minus 320,000, and you can see how the price has traded since then. So when we have those kind of peaks at the bottom there, you've got these peaks in price, and price moves down again, just down through March of 2022. Aggressive selling from the commercials, and price moves to the downside. We're not quite at those levels yet. We're at the sort of minus 222,000. So for gold at the moment, I still feel like there could be some potential upside to price, because what this tells me is that the commercials don't see this as the top in the market. Okay, so looking to see if price will come a little bit higher on gold. However, in the short term, obviously, we're seeing that price is pulling back. If we go to our chart here, we can see that the price of gold rallied into that 2075 handle. We rejected. We're working within that kind of bullish channel as well, and we can see that price is currently trading outside of that. If I'm having a bit of a slow day here today, there's not real any sort of momentum. There's no catalyst. Maybe price is going to wait for tomorrow with the unemployment claims to start really kind of rocking and rolling here, and maybe pushing down to that $1950 area, which is where I'm expecting the price of gold to come down to. Okay, just because if we take a look at the bigger picture on this weekly time frame, we are technically trading off that range high at that 2075. I'm expecting a bit of a pullback, especially because if we go to our US dollar index, we're starting to become a little bit bullish on the US dollar, and we know that the price of the US dollar, or the strength of the US dollar, is going to affect the price of gold. So we're now approaching the 103 resistance. That might be a little bit of a sticking point on the US dollar index, but we may see price just kind of come back down into these kind of previous structure areas before trading back higher, or alternatively we may just break straight through the 103s and head towards this trend line resistance. I think if that happens, then the price of gold is going to trade down to that 1950 handle. So that's what I'm expecting there for the price of gold. If anybody's watching along and has a different opinion, let me know in the comment section below. It's going to be interesting to see how the US plays this debt ceiling stuff at the moment. If you haven't watched the video on the debt ceiling that I posted on Monday, there's a really in-depth video on that and on the price of gold that you can check out after this webinar. But essentially, there's a little bit of sort of or the Financial Times put it in a good light. They kind of said that the US president is kind of playing chicken with the Treasury and Congress with regards to coming up with the agreement to push the debt ceiling higher. Now, I don't think that they'll ever get to the point where the US defaults. I just don't see that happening. But if it does, then I think that could be really bullish for gold, because investors are going to really want to push the money into somewhere, and the value of the dollar could drop quite significantly, because people will see it as a devaluing currency. So there's got to be a little bit of an element of that there. But like I said, I don't see that happening. So what I really see happening at the moment is price of gold to come lower. We come into this 1950 area, and then we could potentially see further seasonals play out. And we talked about seasonals this morning. So I'm going to bring in Markets Made Clear seasonal chart. This is where I get a load of my information from. If you want to head over to marketsmadeclear.com, then feel free to do so. Not sponsored in any way by them or anything like that. So yeah, but they've got a really cool sort of seasonal pattern here for gold, and this is what I'm trying to follow at the moment. Now, over the past average of 20 years, we've seen that between May and July, start of July, we've kind of been in this sort of box, I'd say, a bit of a sideways movement for gold. Now, usually we find a sort of low towards the end of June, start of July, and then gold prices continue higher. So that's what I'm kind of watching for going into this month. Now, what's really cool about Markets Made Clear is they've got a new sort of system here, and we can add sort of different things to it. Now, what's really cool feature that I really like is this what if feature. Okay, so we can select a month. So let's go for May, and we're going to select what if May is negative, okay, because that's what we're getting at the moment. We're getting negative gold prices for the past couple of weeks. So what if that currency is going to be or what if gold is going to be negative for May? What would that potentially tell us going forward? Now, you can see here it still kind of gives you that bottom around about the middle of June to end of start of July. So that to me is a good sort of sign that despite the month of May being negative for gold, there is still potential for it to find a low. And what's really, really nice about this as well, we can get sort of specific on dates. So we've got potentially a low could form on the 14th of June. And we also have a low potentially to form on June 27th or June 30th. So that's going to be quite interesting to see if that does follow through and whether we can see that seasonal pattern play out. Because what it tells me is even though gold may not be following the 20-year average, and although that it has been negative, the likelihood of a low being formed is quite strong. Okay, so looking to see how that will play out. What's also quite cool as well, if you can see down here, and again, I'm not sponsored or anything, but I just love the way they break things down. You can see that we've got current market correlations, okay? And you can see pound sterling, there is a strong correlation at the moment, which is 95%. With the price of gold, you've got the US dollar index, obviously, minus 94% because it's inverse to it. Silver, 94% correlation, which is to be expected. And then we've got a couple of a stock here, which is 𝖥𝖣yi Group or 𝖥𝖣yi Group, minus 94%. Obviously, if the price of gold moves higher, then the stock prices could move lower. And then you've got euro as well with a 92% correlation, which is quite interesting to see at the moment. So cool little thing to look for there. I'm looking for some lows to form between June and July. Hi, Just Nothing. How you doing? Let me know if you are joining me today. Let me know where you're coming in from. Like I said, tomorrow we're going to be looking at the US unemployment data coming up, the unemployment claim, seeing how that can shift the US dollar, because that's going to have a detrimental effect on the price of gold as well. But let's have a look at some technicals then. So the last time we did a gold webinar, we were talking about looking for the dollar to get stronger. And we actually talked about the potential double top price coming into this area here, or this double top pattern, sorry, to come in at these prices at the 2075. And that's exactly what happened. You know, price rallied into that 2075 level. We broke to the downside. We come back in. We retested that sort of body to wick of that previous high, and then price broke lower. And one thing we talked about was looking for the double top or looking for the neckline retest. And again, price came into that neckline retest. We had a bit of a head and shoulders pattern form, and price has continued lower since. So I'm looking to see if we get that continuation. The only thing I would be wary of right now is that we're coming into this sort of strong area of support, which is between sort of the 1980 level and the 1970 level as well. And you can see buyers have stepped back in here on numerous occasions in the past, and we've found a very strong support there. So I would be a little bit wary that we're coming into that overall level there, because we may see some short-term buying, or if the catalyst is strong enough and the dollar's strong enough, we may just see price trade aggressively through those lows. And then we may see price come into that 1950, which is where I'm looking for a potential opportunity from. Going on the lower time frame, so if we go to the 15-minute time frame and we just kind of zoom in a little bit, you can see that the fact that we are technically starting to make those lower lows and lower highs. So if you're a technical day trader, this might be something you're interested in for further opportunities to the downside. However, I prefer looking at a higher time frame sort of opportunity here. And although we've closed outside of this bullish channel, at the end of the day, price could easily close back within, and we could trade a little bit higher. I'm just wondering where the dollar index is going to go, because that is what I'm really going to be keeping my eye on, because if we do start to see that pulling back, you don't want to be short in gold here. Okay, you really don't. So it's always good to be looking at those correlations in the market and looking at how the price of the dollar can affect the price of gold. Is it even having a strong correlation? Well, we've just looked on Markets Made Clear, and we can see that there has been or there is a strong correlation between the dollar and gold at the moment. So expecting that to play out there. So if the dollar index does pull back into sort of your 102.60, that could be where you want to be eyeing up your price of gold short, and that could bring you into sort of these lows again on gold. Okay, so this is where, and to be fair, when I'm looking at my potential positions, I want to be looking at previous areas where sellers have got involved in the market, and for me, that is up towards these sort of highs in here. Okay, because we know that sellers are going to reject there, sellers have rejected here. We could argue the fact that that's a really strong selling candlestick. So if we get anywhere near this kind of high of that candlestick, we know sellers have been aggressive there as well. And that could also be the fact of that drove prices lower. So that could also be an area of interest as well. I think if we go to a lower time frame, we could probably narrow this down slightly into sort of this area here, where we can see a bit of strong buying coming in, that aggressive selling. Okay, typical fake out there, right? Bullish or sellers trying to get involved, then turns bullish. Retail would have jumped on bullish long there. Market drove prices lower. We have to also consider the fact what's going on with the US Federal Reserve as well. Obviously, the market is sort of pricing in rate cuts at the moment, and I think I saw this morning on Bloomberg, JP Morgan pricing in 2 potential rate cuts before the end of the year, and some other banks are sort of expecting 3 rate cuts. I don't particularly see 3 rate cuts. I think that's quite a lot, that quite a stretch, to be honest. But we can kind of talk about and debate about what the Federal Reserve could do next. And they did talk about pausing in the next meeting. They did also talk about the fact that, if inflation remains strong, they will still act, because they really want to get that inflation down to the 2% targets. So it's going to be really interesting to see what the Federal Reserve kind of come out with next. I think that we're probably going to see them pause in the next meeting, or do one more 25 basis points hike and then pause. But the inflation rate in the US has been coming down. If I just bring into another free website that you can have a little look at, obviously this one's a paid one as well. But if you were to look at tradingeconomics.com, really great website to get all sort of interesting data points. But you can see they have a little table down here, and you can see the GDP figures, GDP year on year, quarter on quarter, current interest rates, inflation rates, jobless rates, and they get you a bit of an overview of what's going on in the United States as well as other areas as well. And you can click onto the inflation rate here. It will take you to the latest inflation rate details here, and you can see that the inflation rate really has been trending to the downside in the US, okay? Even to the fact that it's coming down to 4.9% throughout April. So inflation is coming down in the US, and I think that's why we're probably going to see the Federal Reserve talk about potential pausing in the near future. And that could obviously have a great effect on the US dollar index, because the talks of pauses have seen the dollar actually strengthen slightly. So if they were to pause, would that mean the dollar would strengthen further? And if so, where would it go to? We've got the trade for the 103s. We could even argue the 105.75s could be targets as well. So yeah, definitely some opportunities to see that market trade higher. Let's have a quick look at euro. I'm still interested in where euro is at. I think there could be a good breakdown in euro. Any questions so far, guys? Anyone in the chat want to have a chat? Any questions? We are running another webinar at 7 p.m. tonight. So if you've only been able to catch sort of 5-10 minutes of this one, there will be another one at 7 p.m. British Standard Time. I'll be running a webinar as well tomorrow on the unemployment claims in the US. That is out at 1:30 p.m. Okay, because I want to see how the US dollar is going to react to that type of news. The unemployment rate is unemployment claim, is expected to come in a little bit lower than previous, 253 over the previous 264. But obviously we want to see that unemployment claim come in a little bit higher, because that's what the Federal Reserve want to see. Now, do remember, guys, if you are watching the Gold Market Mastery, you do have a chance to win an ounce of gold. There is a banner running at the bottom, so I will read that out for you if you would like. So welcome to the Blueberry Markets Gold Market Mastery webinar. As part of the Gold Market Mastery event, we're going to give you an opportunity to win an ounce of gold. So there are some T's and C's, but we're giving away an ounce of gold to 5 lucky clients, and you'll gain 1 entry if you trade during the campaign period, which is from the 24th of April to the 26th of May, and a bonus entry if you attend the Gold Market Mastery events. So hopefully you'll all be in for a chance for that. Any questions, guys? Let me know your thoughts, especially if you're on YouTube and Facebook. You can't comment if you're watching, unfortunately, across other platforms. We'll be doing some shorts today as well, covering some of your questions as well. So if you do have a question that you feel you don't want to ask right now, but you think that it could be something that you'd want to see from us, then drop that in the comment section, and I'll be able to make some content around that as well. So hopefully we'll get your questions answered. Let's just cover a little bit more about the market then. So if we actually have a little look at what's going on this week, like I said, we talked about some euro downside. We've got a bit of CAD data as well coming out tomorrow, which would be quite interesting. Actually had a CAD yen long position this week, which turned out quite nice. So we'll see what happens there. Yen is an interesting market as well, because obviously we're seeing the yen depreciate, and then the price of gold's moving lower. So the market's not really seeing gold as a risk play at the minute. But you can see they're kind of semi-correlated in a way, because the price of gold usually rallies on risk events. Same with the yen. and we're not seeing at the moment yen actually really depreciating. However, I do know that the yen is coming into a period of seasonal bullishness, and dollar yen is like approaching a very key level as well. So it's going to be interesting to see what catalysts drive these markets forward. I think obviously the buzzword this week, or the sort of thoughts on this week, is definitely around those the US debt ceiling at the moment, which is definitely a hot topic in the market. So maybe we'll talk about that in a little bit more depth this evening. But if there's no more questions, then I will probably leave it there. In the chat, you can see that there's the free COT report. So if you want to jump on that, have a little look at that. I'll get my seasonal data from Markets Made Clear. So I'll also get some COT data from there as well, but that is not free. So there's that in there for you. I did show earlier actually another seasonal chart as well. So if you look up equityclock.com, there's some free seasonal charts there for you as well. But I might leave it there. Hopefully you found some info out, something you might have learned something new, especially when it comes down to sort of the seasonal stuff we've taken a look at. And yeah, I will speak to you later this evening at 7 p.m. And yeah, thank you for joining me. Thank you for taking your time to watch. If you are watching on YouTube and Facebook, please like the video. It really does help us know that you want this type of content. And yeah, I will speak to you later this evening, guys. Cheers. Thanks, Calvin.